It's been a struggle for Americans looking to buy a home over the last few years. Home ownership fell nearly 65% at the end of 2014 to the lowest reading since 1994. But could there be a housing turnaround for those first-time home buyers? With me now to discuss market makers Erik, Schatzker. Is there?
Well, Alex, there are some trends, shall we say, favoring the first-time home buyer. And the first-time home buyer is, so to speak, the problem here. Fewer than 30% of previously owned and sold homes in 2014 went to first-time home buyers. 29%, in fact, is the official figure, the lowest since the National Association of Realtors began tracking this data back in 2008. And why is it so difficult for these people to buy homes?
Because they're living with their mom and dad?
Well, they're young. They tend to be young people, young couples most of the time. They've got a lot of student debt, for example. Credit conditions remain tight. The underwriting standards that the banks are demanding remain tight. So it's harder for these people to get loans than it was before 2008. But several things have happened that may allow that percentage to rise. Among them, the federal government has dropped to at a minimum of 3% the amount of money, the limit on what you have to put down in order to get a federally insured mortgage. Now, that 3% down payment isn't available for all mortgages, but it does give you a sense of where it is. Down to 3 from 10. There's a smaller mortgage insurance premium being charged by the FHA, for example, that applies to people with lower credit scores. And of course, the economy has picked up some steam, and there is the unemployment rate has dropped. Obviously, there's wage growth. There are jobs being created. We haven't seen the wage growth. That's a big question mark.
Yeah, 3% seems a lot closer to 0% down payment than the 10% that other home buyers.
Of course,
I mean, that's a huge risk.
It raises the most important question of all, which is, should we be trying to incentivize more home ownership? Does the fact that the percentage of Americans owning homes, does the fact that it has dropped say something bad about America, or bad about the American economy, or bad about the way the economy has been managed? I don't know, quite honestly, but here are some things to consider. If you buy a home, you are stuck with a very illiquid asset, right, to begin with. You are highly leveraged. You're at the very least highly indebted, and you are, if you're borrowing with a 3% down payment, highly leveraged. If the house drops by, if the value of the home drops by 3%, right, you're underwater. And finally, it creates this illusion of wealth. When people's home values rise, they tend to feel good about spending. They borrow more. Is that necessarily a good idea?